Welcome back to Investing Talk Podcast.
Today we're looking at Clearmind medicine.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We're talking about Clearmind, a clinical stage pharmaceutical company. And, for a company like this, it operates purely on its future promise.
Right. There's no revenue here. The valuation is all about hitting those clinical milestones.
Exactly. Their whole focus is on developing new therapeutics for things like alcohol use disorder, binge drinking, and even eating disorders. So everything, and I mean everything, hinges on that validation data.
When you say alcohol use disorder, we should be clear. This isn't some tiny niche market they're going after.
Oh, not at all. The scale of the problem they're trying to tackle is just immense. It's often the first thing you look for, right? A huge market opportunity.
That's so massive.
To really put it in perspective for you, the cost of alcohol use disorder, or AUD, in the U.S. alone, it's estimated at around $250 billion annually.
$250 billion. Wow.
Yeah, that's everything. Healthcare costs, lost productivity, and the human cost is referred. It's just staggering. We're seeing roughly 178,000 deaths a year just from binge drinking.
That's a huge public health failure.
Right.
It really suggests that whatever we're doing now, well, it's just not cutting it.
It's not. The whole system seems to be making, at best, these tiny incremental gains.
And that's the opening for a company like Clearmind.
That is exactly the environment they're stepping into. And actually, there was a huge macro tailwind for this just recently. The Surgeon General's advisory in January of 2025.
Oh, I remember that.
Right. It explicitly linked drinking alcohol to cancer risk. So the pressure is really on now to find genuinely better therapeutic options.
Okay, so the need is obviously there. It's urgent. But why a novel psychedelic? I mean, Big Pharma has been trying to treat this for decades. What's the real competitive advantage here?
That's the key question. And it brings us to their MEAI molecule. You're right to question the current standard of care drugs like naltrexone, disulfiram. They've been around forever.
And they don't really work that well, do they?
Their efficacy is, frankly, modest. And the relapse rates are just stubbornly high. They mostly just suppress a craving or make you feel sick if you drink.
So they're just treating the symptoms, not the underlying psychological driver.
Precisely. MEAI, on the other hand, is a totally different approach. It's a novel psychedelic therapeutic.
Yeah.
The whole idea, and this is really the core of the entire investment thesis, is that it doesn't just block a craving.
It does something deeper.
It aims to fundamentally change the patient's psychological relationship with alcohol. If this actually works, you're moving from just temporary maintenance to maybe facilitating a real lasting change, potentially in just a few sessions.
That's the paradigm shift.
Yeah.
That's what could justify capturing a huge piece of that $250 billion market.
That's the ball game. And it explains why the entire valuation is tied to clinical progress, not sales.
So let's talk about that progress.
Yeah.
Late 2025 seems like it was a huge inflection point for them. It sounds like they basically de-risked the molecule. What happened?
The big news dropped right around October 30th, 2025. Clearmind announced they'd successfully completed dosing in their very first clinical trial.
Okay.
And then pretty quickly after that, they released very positive top-line results. For anyone who follows biotech, you know this is the moment of truth.
This is when it goes from a theory in a lab to, does it actually work in people?
Yes, it's that huge transition. And for a novel drug, especially a psychedelic, just clearing that first human safety hurdle must have been a massive relief for investors.
I can imagine. So monumental.
Before this, the entire company was just a high-risk bet on a hypothesis. Now you have actual clinical validation that MEAI is safe in humans, and critically, it showed the early efficacy signals they wanted to see. The molecule is now clinically credible.
And the regulators weighed in on this pretty quickly, right? The DSMB gave them the green light. Why is that specific board's approval so important here?
The DSMB, the Data and Safety Monitoring Board, they're like an independent watchdog for the trial. Their approval is always important, but for a psychedelic-based compound, it's absolutely critical.
Because of the stigma or the potential side effects?
Both. It's a signal to the FDA and to the market that the risks, any potential adverse psychological effects, they didn't outweigh the benefits they saw in that phase I study. It just de-risks the whole program from a foundational safety standpoint.
Which lets them move on to bigger trials.
Exactly.
So if they keep hitting these safety and efficacy goals, what does that mean for their regulatory pathway? Because in this space, speed to market is everything.
Speed is everything. And
Yeah.
this is where that early positive data gives them this powerful optionality. These results suggest they could be eligible for the FDA's breakthrough therapy designation.
And that's not just a small thing. I mean, that's the drug development equivalent of a fast pass at an amusement park.
That's a perfect way to put it. It means more frequent, intensive contact with senior FDA officials. It means a rolling review of data.
So they don't have to wait until the very end to submit everything.
Right. And it could even mean fewer required trials overall. If they get breakthrough status, it's basically the FDA saying they believe this drug could be a substantial improvement over what's already out there. That designation alone would be a huge market-moving catalyst.
Okay, that clarifies the regulatory side. But let's switch gears. A successful trial like that needs money for the next stage. A lot of money.
Absolutely.
And for a pre-revenue biotech, cash runway is, well, it's king.
It is. But hitting a milestone like this usually opens up the checkbooks. And Clearmind was very effective in shoring up their balance sheet to fund these critical phase 2 trials.
Let's talk about the numbers they pulled in right after that good news.
So in September 2025, they got the first part of a raise, securing $2.25 million from CLA investors. That institutional backing is so key.
Oh, right.
And on top of that, they have another $1.75 million committed, which should close in Q4 2025.
And it sounds like the investors wanted more skin in the game because there's even more capital available if the company keeps executing.
That's right. They have an option to raise up to $6.75 million more. It's totally at the company's discretion.
Which means if the next set of data is great, they can tap that capital at a much higher valuation.
Precisely. So when you add it all up, the committed and the optional funding, you're looking at a potential $10.75 million available.
And how far does that get them?
That is the difference between survival and desperation. It gives them a crucial runway, maybe 24 to 36 months, enough to get through the phase 5 readout and well into phase IB. The fact that sophisticated investors are putting this money in, it signals a very strong conviction.
That reassures you on the operational side. But let's look at the stock price itself. Back in September, it was sitting around $1 a share. That feels incredibly low given the market they're going after.
It is. And to understand why, you have to look at its history. The IPO price back in 2022 was $6.50.
$6.50 down to $1. Ouch. That's a huge decline.
It reflects shattered expectations and just the brutal reality of clinical biotech. The market was pricing in intense skepticism. The high failure rate of these early trials, dilution fears, and of course the regulatory risk that used to hang over anything psychedelic.
So that $1 level wasn't just a technical floor. It was the market basically saying, show me the proof.
Yes. Which makes that positive data in October all the more dramatic. It completely flips the script. The stock now becomes this fascinating, deep value recovery play.
And we've seen this before, right? A clinical stage biotech that's been beaten down gets one piece of really good data.
And it creates what we call a V-shaped recovery,
where it just rockets back up.
It can be explosive. I mean, it is not uncommon to see 100 to 300% moves after robust positive trial data in this sector. The thing to watch for is sustained buying above that $1.50 to $2 range. That's your signal that bigger funds are getting comfortable.
Okay, but let's play devil's advocate for a second. Don't those big jumps get immediately crushed by a massive capital raise that dilutes everyone?
That's an excellent question and a huge risk normally. But the way they structured this financing helps protect against that.
The optionality part.
The optionality. If the stock jumps 200%, the company is incentivized to raise that money at the new higher price. They can get the cash they need by issuing far fewer shares than they would have at $1. It minimizes the dilution.
That's smart. It aligns everyone.
Oh.
Okay, so let's look ahead. This is where it gets really interesting for investors now. The catalyst calendar. What are the key dates we should be watching?
The next 3 to 6 months are absolutely crucial. First up, we're waiting for the full phase IADIA data readout. That's expected sometime between Q4 2025 and Q1 2026.
And that will give us the detailed numbers beyond just the top-line results.
Exactly, the detailed efficacy metrics. If those are strong, you can expect a very significant market response.
And right after that, assuming the data is good,
then comes the signal of confidence. We'd expect them to announce the start of the phase IB trial, probably in Q1 2026. Kicking off that bigger, more rigorous trial shows that they and the regulators are all in.
And then we get to the really big speculative events, the potential game changers.
Right. First is that application for breakthrough designation we talked about. That's a pure binary event in Q1 2026. They either get it or they don't.
And the second one is the big one.
The biggest long-term driver, the possibility of a partnership or a licensing deal.
With one of the giants.
Yes. Companies like Eli Lilly, Roche, Novartis, they are actively scouting this space. If Clearmind shows compelling phase 2 efficacy, a partnership would instantly validate the whole platform and provide all the capital they need to finish the final trials.
Okay, we've laid out a pretty compelling bull case.
Yeah.
But we have to look at the risks. What's the single biggest thing that could go wrong right now?
It's always the same in biotech: clinical trial failure. Specifically in phase IB. That's the bigger, more statistically rigorous trial. If the positive signals they saw earlier don't hold up under that pressure, the stock would get hit hard.
But you'd argue the risk-reward is still skewed to the upside.
The phase I results significantly lowered the core risk of, will this drug even work? It's now more of an execution risk. And you have to remember that $1 price already priced in a huge amount of failure.
So the potential 200 or 300% upside outweighs the, 30 to 50% downside if it fails?
The math certainly favors the upside at these levels, but, there are other risks. Intellectual property, are their patents strong enough? And market adoption, can they convince doctors to actually use it? Those are longer-term hurdles.
And what about that old skepticism around psychedelics? The reputational risk. Has that really gone away for good?
I think it's dramatically shifted. The pendulum has swung. The FDA has already set precedents with psilocybin and MDMA. And the whole societal conversation, thanks to things like the Surgeon General's report, now sees effective addiction medicine as a huge priority, not a political issue. That old fear factor it's largely faded.
So to sum it all up for you listening, we have a novel therapeutic, MEAI. It just cleared its first major clinical hurdle. It's targeting a massive $250 billion market where current treatments are failing.
And it's backed by institutional capital to get to the next stage, all while trading at a deep historical low. It's a classic asymmetric recovery play, totally dependent on upcoming clinical data.
Fascinating setup.
It is. And what's really compelling here is the potential societal impact. If they're successful, this could fundamentally shift how we treat addiction, moving away from just managing symptoms to potentially curative outcomes. That's the massive societal value that underpins the whole thesis.
A really powerful story based on pure clinical execution. We suggest you keep a very close eye on that Q1 2026 phase TIAD data readout timeline. That's going to be the next big decisive catalyst. We always appreciate you joining us for the analysis. If you want more in-depth knowledge and analysis delivered straight to you, make sure you subscribe to the podcast.